business news, we're news for business people.
Good morning, you're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. There's lots to tell you about today, so let's go straight to the headlines. It's another muted day of trade in Asia with the early risers all trading in the red. Donald Trump registers his first major legislative victory after the US Parliament puts its stamp of approval on the largest tax overhaul in more than 30 years. Rising risks to inflation trumped growth concerns at RBI's monetary policy meeting in December. That's based on the minutes of the meeting. Special CBI Court Judge O.P. Saini will read out his sentence for the accused in the 2G scam today, 6 years after he started hearing the case. On to international markets now, and US equities closed lower on Wednesday as an early rally petered out. This despite the Congress passing the much talked about tax bill. Bloomberg's Abigail Doolittle wraps up all that happened in the US market.
Stocks finished lower in Wednesday's Wall Street session. The Dow, S&P 500, and the Nasdaq all finished fractionally lower after flipping between very small gains and losses. And this comes against the backdrop of Congress passing tax code to present to President Trump for his signature. If President Trump signs the bill, as is expected, it will represent the largest overhaul to U.S. tax code in about 30 years. Now, that's been a big driver, many believe, for the rally we've seen in stocks on the year. But again, on the day, tiny pullback. The S&P 500's pullback broad-based in nature, 70 of the 11 sectors lower. 2 of the rate-sensitive sectors on bottom, real estate and utilities. This as bonds sell off, that means yields go higher, so the dividends for those companies look less attractive. The top sector, though, energy, up 1.4%, climbing in sympathy with oil, which was boosted by a bullish Department of Energy inventories report. Now, a couple movers on the day really stood out. FedEx up 3.5% on a big beat and boost quarter, plus Chipotle Mexican Grill on the other side, down 4.6%, not climbing, in fact, falling quite a bit on a report that there could be an illness stemming from a California Chipotle Mexican Grill store. And of course, this has been a problem for the company in the past. So those shares certainly selling off, as did Bitcoin. Bitcoin down on the day. But when we complete this picture across asset class, it really provides a sense that it was a neutral risk appetite tone with stocks down ever so slightly and haven assets basically flat to mixed. In New York, Abigail Doolittle, Bloomberg News.
Now, House Republicans passed the most extensive rewrite of the US tax code in more than 30 years, and that's handed President Donald Trump his first major legislative victory. What does it mean for corporate America, though? Rami Incencio from Bloomberg wraps up in this report.
We are, of course, expecting President Donald Trump to sign that on January 3rd. That's according to what we're hearing, according to the latest news. But what it means for corporate America is just the enthusiasm that we're seeing in terms of the highest tax companies. Hop into my first Bloomberg terminal chart, and this is G#BTV7169. You see the yellow line, that's the baseline. Anything up above that, that means that the highest tax companies, according to a basket of Goldman Sachs, is doing better than the S&P 500. Now look to the right-hand side of your screen. You're seeing that pop above the yellow line just in the past few days because we are seeing certainty. We did see certainty that this was definitely going to pass. But you can see also over the last several months that it had been under that line, showing that the S&P 500 was doing better. Of course, it was in limbo for several months. And you can see when you look to the left-hand side of your screen that there was so much ebullient, so much enthusiasm when Donald Trump was first elected, thinking that this corporate tax reform would pass early on. Of course, it didn't, but then again, several months later, this is where we are. Now let's zoom in a little bit more into my next Bloomberg terminal chart, G#BTV3316. Now this is a 1-month look in terms of what's happened. Now the white line here is that Goldman Sachs high tax index. The blue line is a Goldman Sachs low tax index, and you can see that that blue line has been flat over the course of the past month or so. But you can see that the white line has been inching up higher and higher, at least on this chart. But but in terms of relative scale, for example, on November 28th, you can see the first bump up. That's when the tax bill left the Senate Budget Committee. Then on December 2nd, the Senate actually passed its first version of the tax bill. Then you look to the right-hand side of your screen. December 15th, key GOP holdouts, for example, Senator Marco Rubio of Florida, as well as Senator Susan Collins of Maine, both said that, we are going to support this, and that we've seen that this has actually sustained that level of confidence and enthusiasm in the stocks ever since. All right, let's pull it back. We've gone closer in. Let's pull it back to the 40-year time frame. This is #BTV8122 and my last Bloomberg Terminal chart. I put this into focus because we're seeing that the corporate tax rate has actually fallen, has actually halved over the past 40 years. The red bars here are according to Republican White Houses. The blue bars are according to Democrat White Houses. But there is no mistaking these. These numbers don't lie, guys. The corporate rate has fallen to about 20.4% from about 40% 40 years ago. And looking at the white line, guess what? That's the personal tax rate. Has that gone anywhere? No, it hasn't. It stayed stagnant, up or down by around 15.5% where it is right now. Now, the question looking ahead is, what is the real tax rate? What is the real effective tax rate moving ahead once Donald Trump does sign this, as he is expected to, on January 3rd of the new year?
Well, Donald Trump has praised the tax reform bill as an historic win for the American people. He emphasized that this would bring $4 trillion into the economy. Here's what he said.
We are going to bring at least $4 trillion back into this country, money that was frozen overseas and in parts and worlds, and some of them don't even like us, and they had the money. Well, they're not going to have the money long.
Asian markets have opened lower, with the Nikkei in Japan trading lower by 0.6% in early trade. Let's look at whether or not it has changed from that. Let's pull up the hot board for, well, it's come off a little bit and it's trading at 0.45% down now. But attention in Japan will be on the board meeting of the Bank of Japan that will take place in Tokyo today. And all signs point to monetary stimulus remaining unchanged. The focus of the meeting is expected to turn to where the BOJ is headed in 2016, the possibility of policy change, and whether Governor Kuroda drops any hints about the likelihood of him staying on after his current term ends in April. But let's turn to the Indian market now, and Darshan Mehta and Agam Vakil are here to set you up for the day's trade and to tell you everything F&O. Morning, guys. Darshan, first to you. Not the best cues coming in from the international markets.
Yeah, it seems, because look at the SGX Nifty, look at the Asian markets, and you can make out that there is weakness. If you're looking at the SGX Nifty, it's down by almost 26 points. So there seems to be a hint of weakness after 4 days of rally. Yesterday, we saw the Nifty down in trade. Most of the ADRs managed to inch up in the green. Vedanta, the commodity cycle seems to be doing well. Vedanta on the London Stock Exchange was up almost 4%. Tata Motors gained, HDFC Bank gained. So most of the ADRs did well. Wipro and Dr. Reddy's were marginally flattened down in trade. So that's the ADR setup. Now, crude surged almost over 1%. The WTI again moved above the $58 barrel mark. The Brent is even higher. There were reports of US storage dropping and orders restarting. So that is why, crude as a basket did extremely well. Now, it's trading flat in the morning session, so that's about it as far as crude is concerned. Now, base metals on the LME, it was a strong close by base metals on the LME. Apart from lead, all of them surged in trade. So let's take a look. Nickel was up almost 2%, copper was up almost 1.5%. You had aluminium, which was up almost 1%, tin, which was up 0.6%. Lead was the only one that was down almost 1%. So overall, commodities did well. Even in China, if you're looking at it, it's a strong start for commodities in China. Steel, aluminium, copper, all of them are gaining. Rubber, the last time I checked, was flat in trade. Gold is trading higher for the second straight session. That's the only cue that we are getting in. As far as fund flows are concerned, FI sold in almost 1,500 crores in the cash market yesterday. This is the NSE provisional data. As far as DIs are concerned, DIs bought in almost 146 crores. So yesterday's drop was mainly on account of heavy selling by the FIs. Now, if you look at the month-to-date basis, you can know that FIs have sold in almost 4,000 crores in the cash market, but most of it has been absorbed by DIs. They have bought in almost 6,100 crores in the cash market. Now, if you're looking at, the Nifty itself, it snaps the 4-day rally. It was down by only 19 points, but today the SGX Nifty is indicating a gap down opening. What did well? The real estate index did well. It was up 3%. The PSU banking index was down the most. It was hit, and some of the PSU banks were down in trade. Now, the Nifty was down 19 points. What contributed? Infosys, L&T, ICICI Bank contributed on the positive side. Post the fundraising, HDFC Bank was down in trade. HDFC was down in trade. So private banks and Reliance were the ones that actually dropped in trade. But Agam, what are the FNOQs indicating?
Well, we've seen the Nifty go back to consolidation. So currently is standing at a little less than 10,500. We'll have to wait and watch whether or not we do eventually see that mark breached. But for now, it's currently standing at around 10,444. We've seen unwinding in positions as far as the Nifty Futures are concerned. As far coming down to the Nifty Bank Futures as well. Well, not too much to speak for. It's largely flattish decline of around 0.5% and about nearly 6% decline in open interest. That said, moving in, let's take a look at the WIX. Well, that remains unchanged at around 12.19, nothing much to speak for. And the put call ratio has moved up higher to around 1.49 as compared to 1.44. This is, of course, the Nifty put call ratio. In terms of changes in open interest and what's happened yesterday, again, we saw more writing in the 10,500 put. Of course, this is still something that we're going to have to wait and watch for. But this does indicate to a certain extent that we could see there could be a likelihood of the Nifty moving up above this mark. Of course, unwinding in 10,400 and 10,300 calls. That said, in terms of stocks which are moving in and out of the band, we have Balrampur Chini and DLF moving in. On the other hand, we have stocks which have also moved out of the band. So we have TV18 and Wockhardt December futures moving out, and we're watching out for the Ramco Cements. A substantial up move of around 13% for its futures. Its underlying moved up by as much as 15%. Its open interest has seen it's doubled. It's literally doubled at around 105%. So we'll be watching out for this, and we'll be waiting whether or not we do see more longs building in, or perhaps there could be some covering. But Alex, all eyes will be on the Nifty and whether or not we take that crucial mark of 10,500 as we move into today's job trade.
Yeah, thanks for that, Agam. We'll have to watch out for those levels that you just talked about. But let's move on to the minutes of the RBI's Monetary Policy Committee meeting that took place earlier this month. And they showed that the members of the MPC remained wary of the upside risks to inflation despite uncertainty about a pickup in growth. Ira Dugal brings you the analysis in this report.
Minutes of the December Monetary Policy Committee released on Wednesday don't paint the happiest picture of the economy. The underlying narrative coming out from the minutes is one where members are absolutely not certain as to how quickly or how far growth will recover, but they're far too worried about inflation risk starting to pick up to do anything about growth. Let's talk a little bit about what they say or what individual members have said on the inflation front. Remember, of course, that the MPC had kept rates unchanged at 6% and also raised its inflation target mildly at its December meeting. Governor Urjit Patel, talking about some of those inflation risks, said that there has been an increase in inflation expectations of households. He also pointed to rising input cost pressures, which could then feed into output prices as well. And finally, he talked about concerns on the fiscal side, which, if they actually materialize, could have a bearing on inflation too. He did say that some downside could come in from vegetable prices once a seasonal downtick comes through, and lower rates of GST on certain items, about 200 items. Rates had been reduced in November. Some of that could help ease the inflation pressures. But broadly, Governor Patel was of the view that inflation is evolving as expected and there are upside risks to inflation. There were other members of the committee who expressed similar concerns. Viral Acharya, for instance, focused on rising oil prices and the impact that is having on the inflation trajectory. Michael Patra, Executive Director at the RBI, focused on the fact that inflation pressures were starting to get generalized already. Chetan Ghate and Pami Dua also had similar concerns and noted the increase in inflation that has already taken the inflation number to above the RBI's target of 4%. Remember, in November, inflation stood at 4.88%. Now, Ravindra Dholakia is the lone dove on the MPC and continues to argue for a rate cut. He argued for a 25 basis point cut and said that the real concern right now for the economy is growth and not inflation. In very strong words, he said that had the policy rate been cut to 5.75% point in June, as I had argued then, the economic recovery would have been far more rapid. Although we have missed the bus, it is still better late than never. Now, Dholakia's concerns are focused on growth. That's not to say that the rest of the MPC is not worried about growth. Actually, the comments on growth are far from sanguine. Let's talk about, for instance, what Viral Acharya said. He noted that the output gap remains somewhat negative. You had Chetan Ghate talk about the fact that consumer confidence has weakened and that investment remains quite sluggish in the economy. The economy is missing animal spirits, as Ghate put it in his statement. Urjit Patel noted that growth has started to pick up a little bit. He also noted to some forward-looking factors that could suggest an impending pickup in growth, although a modest one. He talked about the recent large rounds of capital raising that we have seen from Indian corporates and Indian financials, and a pickup in credit growth, which could mean that there would be a slight modest pickup in investment, he said in his statement. But all in all, most members were of the view that the current rate, that is the repo rate, and the current stance, which is neutral, is appropriate for the evolving economic scenario. Michael Patra didn't vote for a change in stance or a change in rates at this point in time, but he did very clearly say in his statement that it's time to signal an end to this rate cutting cycle, which started in 2015 at 8% repo rate. You have now come down to 6% repo rate, and he thinks this is the end of this current cycle.
And speaking about monetary policy and interest rates, let's jump straight to a check on the rupee and the bond market. And Saloni Dhanuka joins us to give you just that. Morning, Saloni.
Good morning, Alex. So talking about Indian rupee first, it ended marginally lower at 64.12 levels against the dollar yesterday, ahead of the release of RBI policy meetings. Now, as highlighted by ERA, the minutes of RBI policy indicated risk towards rising inflation and concerns over fiscal deficit, on which Mr. Urjit Patel, the RBI governor, commented that these concerns will keep RBI alert in the near term. Now, on the global front, the dollar dropped against major currencies yesterday. It dropped for the third consecutive session. However, it now trades steady near 93.30 levels, despite Congress approved the US tax reform bill, as trading volumes are expected to remain thin throughout this week ahead of the Christmas holidays. Now, while broad weakness in dollar helped the euro touch a 3-week high against the US currency, it now trades close to 1.19 mark against the dollar. Elsewhere, the yen weakened ahead of the Bank of Japan policy meeting today. Now, the central bank is expected to keep monetary stimulus unchanged, while traders will focus on their commentary on the growth and outlook for 2018. Now, coming back home, dollar rupee is trading at 63.98 levels against the dollar in the non-deliverable forward market, which indicates a strong opening for Indian rupee in today's trade. Now, moving on to bond market, sovereign bonds dropped yesterday, thereby sending the benchmark 10-year yield to its highest close since July 2016. Yields ended 4 basis points higher at 7.22%, while global funds increased their rupee debt holdings yesterday. They infused a marginal of 150 crore according to NSDL data, Alex.
Well, thanks for that, Saloni. But let's shift now to the commodity space, and Jayesh Khinlani joins us with all the updates there. Jayesh, oil in focus today.
Morning, Alex. That's right. We saw a 1% jump in Brent oil, and WTI climbed to a 2-week high. Now, this is on the back of positive inventory data that has come out from the US. So the EIA has reported that inventory for the last week declined as much as 6.5 million barrels. So that's the positive coming in for oil prices. Shifting focus to the base metal space, we have seen the rally has extended itself for 6 days in a row. The LME base metal index ended up overnight. That was more than 1%. Nickel was the best performer with gains of more than 2%, while lead was the only exception, which declined as much as 1%. Now, zinc has actually posted its highest close in over 2 weeks. It was up 0.5%. Now, Goldman Sachs predicts that there are going to be more gains going into the first half of 2018. Copper, on the other hand, again for a 6th consecutive day, it was up more than 1.5%. Aluminium was up 1% as Chinese production slumped to a 21-month low. And base metals, if you have a look at the Shanghai Futures Exchange, they are trading with a positive bias. However, it is not as much as what overnight we saw on the London Metal Exchange. On the other hand, yesterday I alluded to the Baltic Dry Index. It has once again continued its downward trend, and it slumped more than 2.5% overnight. As far as precious metals are concerned, gold has inched up to the 1270 mark. So that's all we are picking up from the commodity space.
Thanks so much for that, Jayesh. But let's move on to some of the news that came in yesterday and over the course of the evening. Anil Ambani promoted Reliance Naval and Engineering's plea to stay insolvency proceedings initiated by IFCI has been rejected. NCLT's Ahmedabad bench has given Reliance Naval 7 days to file an appeal against its order. Shivani Saxena sums up the development in this report.
Reliance Naval is the second company promoted by Anil Ambani pushed into insolvency by its lenders after Reliance Communication. In November this year, IFCI, a state-run development bank, initiated insolvency proceedings against Reliance Naval as well as its subsidiary Reliance Marine on account of a payment default of a loan aggregating to 159 crores. Reliance Naval subsequently approached the NCLT requesting for a stay on these proceedings, given that the IBC itself is being challenged before the Gujarat High Court. While NCLT refused to grant relief, it has given the company a 7-day window to appeal against this order. Meanwhile, the proceedings against the company will continue on January 11th next year.
Now, after a 6-year trial, the verdict on one of India's biggest scandals, the 2G scam, will be pronounced in the 2G Special Court today. Former Telecom Minister A. Raja was alleged to be at the forefront of the scam, allegations that he has gone on to deny. Other accused named in the charge sheet are DMK Supremo M. Karunanidhi's daughter Kanimori, former Telecom Secretary Siddharth Berua, along with Unitex MD Sanjay Chandra. Shraddha Babla joins us now with the stocks in news. Shraddha, what's the list that you have for us today? Morning.
Morning, Alex. It's a long list today, starting off with SQS India BFSI, where the acquisition of its parent company has actually triggered an open offer for the Indian subsidiaries shares of up to 27.82 lakhs. So that's a stock to keep an eye out for. You also have Varun Beverages, where the company has said that they will acquire PepsiCo India's franchise sub-territory in Jharkhand, along with manufacturing facilities and franchisee rights for the state of Chhattisgarh. So some positive development for this company. You also had Arcom shares rallying as much as 35% yesterday, making everybody wonder what has triggered that rally. But we have two different sets of reports coming in with respect to Arcom. One is a Bloomberg report which says that Arcom lenders are set to meet soon on debt to equity swap plan. And you also have a Hindu Business Line report which is suggesting that Mukesh Ambani's Jio is leading the race to buy Anil Ambani's Arcom's assets. So that could probably have driven that stock further. I'm not sure how it will react today. HDFC is another one. They have sold 6.3% stake in CAMS for 210 crores, and they've sold it to a Warburg Pincus arm. Canara Bank, they floated the RFQ to sell 4 lakh shares of NSDL at a floor price of 805. And you also have a board meeting, they have said, which they will have on 26 December to decide on fundraising via QIPs. Dalmia Bharat to acquire bankrupt Mulli Industries for 350 crores. That's a haircut of about 80% or so that high. That's the news coming in from an ET report. You also have IVRCL, which will be in focus. They've said that they're in a share purchase pack with Cube Highways and Infrastructure to sell 2 arms, and that will be for an enterprise value of close to 730 crores. 2 QIPs which opened yesterday evening. Srikalahasti Pipes, where they have set the floor price at 379, and you also have Khridan Infra, where they have set the floor price for the QIP at 102. Now for Khridan Infra, it's a sizable discount to the closing price of 123, so we could see some negative reaction there. And lastly, you have Pidilite, which will consider share buyback on 26 December, so lots of stocks to watch out for.
And some of those stocks have already reacted very sharply. Reliance Communications up almost 40% towards the end of trade yesterday, Shraddha. But let's move on now. The Delhi High Court has dismissed Indigo's plea against the Delhi International Airport's decision to shift part of its operations to Terminal 2, which is the newly opened terminal in the Indira Gandhi International Airport in New Delhi. Arpan Chaturvedi, who is covering the case, sums up all the court action in this report.
In this case, what Indigo's plea was, it was basically a petition against the order of the Delhi International Airport Limited, or DIAL, which directed the company Indigo to and to some other companies to partially shift their operations from Terminal 1 to Terminal 2. Basically, what that means is that certain flights which are operating for Indigo to Delhi Airport, Delhi, Bombay, and Hyderabad, they were directed to be to start operating it from Terminal 2. Against this, Indigo had approached the Delhi High Court saying that this order of DIAL was arbitrary, but the Delhi High Court, as we know, has not accepted the plea by Indigo. And what small relief that they have got from the court is that the deadline for shifting of operation was January 4, but the Delhi High Court has extended the deadline, saying that that the partial shifting of operations now should take place by February 15th, 2018.
Moving on now, and Somit Sarkar is here to tell you all about the big brokerage calls of the day. Morning, Somit.
Good morning, Alex. On the big brokerages, first we have is Morgan Stanley on HDFC Standard Life. Now, they have initiated coverage on the stock with an overweight rating and a target price of 425. Now, according to Morgan Stanley, HDFC Life is one of the best plays for on India's protection app story. Now, HDFC Life has one of the strongest distribution franchises, as it relies heavily on its parent company, that is HDFC Bank, and it also specializes in protection, which is an underpenetrated and highly profitable segment, according to Morgan Stanley. Now, they're expecting its protection premium to grow at a compounded annual growth rate of 44% over FY17 to FY20, and beyond that they're expecting a growth rate of around 20% for the next 10 years. Now, they're saying that the return on embedded value would remain at around 20% for the next 3 years, and the VNB would grow at a CAGR of around 28% over FY17 to FY20. However, they're saying that near term there's no upside because of a strong listing that HDFC Life had said. They also have a bull case target price of around 580 on HDFC Life. Now, second we have a CLSA on Reliance Nippon. Now, they have initiated coverage on the stock with a buy rating and a target price of 325. Now, they're saying that mutual fund industry is in a sweet spot with rising penetration. They're saying that robust earnings growth and high dividend payout would aid investor return when it comes to Reliance Nippon. Now, they're expecting Reliance Nippon's asset under management, revenue and net profit to grow at a compounded annual growth rate of 23%, 28% and 26% over FY17 to FY20. They're expecting the dividend yield to rise to 3.1% by financial year 2020 versus 1.6% in financial year 2017. They are also saying that the equity share in asset under management would rise to 40% by March 2020 versus 28% in March 2017. Lastly, they're saying that the cost of operations would remain high when it comes to Reliance Nippon.
Thanks so much for that, Somit. Let's move on now. I'm clearly a morning person, but if you're a night owl in Maharashtra, there's good news for you. Shops and establishments in the state can now remain open round the clock in 3 shifts starting today. The state government has amended the Maharashtra Shops and Establishments Act 2017 and notified it. Purva Chitnis tells you all about that in this report.
The Maharashtra government has notified the Maharashtra Shops and Establishment Act of 2017, which allowed the shops to remain open 24/7. This includes restaurants, cinema halls, shopping malls, medical establishment. However, it does not include places that serve alcohol. Now remember, currently the shops remain open until 9:30 p.m., whereas the restaurants are open until 12:30 a.m. As per the new law, the employee can work only up to 9 hours a day, whereas a weekly off is mandatory. If a women employee chooses to work in the night shift, that is between 9:30 p.m. and 7 a.m., she can do so only with her consent. This is expected to benefit around 35 lakh establishments across the state.
Well, there's a lot that we've talked about, but there are also a lot of stories that you should consider reading on the website bloombergquint.com. Here are just a couple. Tanzania has said that Bharti Airtel's local unit belongs to state-owned Tanzania Telecommunications, a claim that sets up an ownership dispute between the government and India's largest phone operator. SEBI chairman Ajay Tyagi has said that the Bitcoin has not posed any systemic threat so far, but it cannot be ignored, and a government panel is looking into its issuance. Well, with that, it's a wrap on this edition of Daybreak. All you need to know is up next, so don't go anywhere. This is Bloomberg Quint.